So let's talk how you can make about 1% on your account this week, most likely, on a short triangle on soybeans. Now, why would I choose this trade idea? It's basically comes down to the price is likely to stay range bound in the next 7 to 14 days. We only really need 4 to 5 days. And as you can see, this is the soybean contract I'm looking at, soybean futures of September. And these are the strikes that I've chosen. Now, obviously, it doesn't have to be the exact same strikes. This is what I chose so far. And we might actually move it because I chose it before the market opened. But as you can see, the price has been moving sideways within this range of strikes for quite a few months. So since, we can call it even since July 2024. So over a year, really good trade in that matter. Now, the second thing is the volatility. So the C-vol is really, really good currently. And this is going to show us the C-vol from Friday close. I think it's a bit down as the market opened up right now on Sunday 8 p.m. But it's closer to the higher sides, which is obviously always welcomed. And this is how we know we are getting somewhat of a good deal. Obviously, volatility can always be at the very highest and you can enter, but it's impossible to time the stuff completely perfect. So I just try to get into really good trades, and sometimes those trades turn into perfect trades, but not often. Now, what is the position management? So the take profit is at 25% of credit, and it's because we want to be in and out of the position very, very quickly. And this is in part because of the tariffs on August 1st. I don't know what's going to happen. I don't know if it will affect the soybean or not. It hasn't been really affecting soybeans too much, but you never know, and I don't want to obviously risk something we don't have to really. For the risk management, we can either buy and sell the futures contract if the price reaches the short strikes, which is very unlikely. Obviously, it's really, really far away, or we can just set a stop loss at 50%. For me, it's a combination of both. So if I would open a position like that, for example, I would set a stop loss at 50%. Mentally, and then when the position is down about 50%, whatever, 40%, 45%, as it's getting closer to 50%, at that point I will have to make a decision. Do I close the position? Do I roll it? Do I buy the future? Or what's going to happen? And this depends on why the price has moved so much that we are at a loss of 50%, or why volatility expanded. So it's a bit more of an advanced technique other than just setting a stop at 50%, forgetting about it. But it's something I think every futures option trader should know eventually, how to make decisions based on what is going on fundamentally with a product you trade. For the position size, collecting about 4% of account in credit. And like I said, the position must be closed before August 1st. So let's look at the position again. So this is basically the strikes. So it's 1100 and 950. So if you go to interactive broker, so I'm choosing the cycle with the least days, which is 33 days, just so we can get that very, very good theta, very rich theta, and be in and out of the position in basically 4.5 days, as you'll see. So 1100 will be right around here, and strike 950 will be right around here. The net delta of the position is basically zero. It's exactly zero. So we have delta 9.4 here and then delta 9.4 here. So this is a super neutral position, which is obviously very welcomed. And we can get about, on the low side, $225 of credit. Now, I will probably wait at least an hour after the market opens for grains for it to gain more liquidity and have a much better bid and ask spread. But at the minimum, right now we can collect about $225. Let's say we have a 100K account. It means we will probably looking at 16 contracts, give or take, maybe 17. Yeah, probably 17 contracts. And there you go. 17 contracts give us $3,800 in credit at the bare minimum. It will give more on the mid price. It always shows here the minimum that you can get. So this is around 3.8% of the total account if we account for a $100,000 account. Now, theta is $242. So if we take profits at 25%, it's about a $950 profit, which you can easily get it in basically 4 days, as you can see, based on this theta of $242. So pretty good, I would say. very quick 1%. Now I myself have a position on soybean. It's a bit of a different position. I took more days and collected a bit more credit, but it's a bit different. I work with quite a pretty huge account. It's not just my own account. It's basically like family money. So I need more credit to be able to justify opening a position like that, because we also have fees eating into the profits, and with really high amounts, those fees really amount to, like a brand new BMW basically. So, and if we can save up even half of it on fees, it's worth it, for me at least. So this is a pretty simple position. The only big question here is how you will manage the risk here. Are you just going to take a loss at 50%? Or are you going to see and analyze what happens once you're down 40 or 50%? If there's a big move or volatility expands, we'll see. Currently my position is up about 1%, maybe 1.5%. So not too bad. I'm pretty happy with it. We'll see what happens. And thank you so much for watching. I hope this trade idea was pretty useful. I try to basically do my best analysis, bring you the highest probability trades. And this is, in my opinion, one of them. And I myself took something similar. So I stand behind exactly what I do. So thank you so much for watching. And I hope you guys will have a good, profitable week.